Hey, good morning. Welcome to the morning brief. Today is Thursday, February 1st, and wow, yesterday was one crazy day with the Federal Reserve deciding not to do anything with interest rates, leaving them as is. The market really didn't like that. So, where are we today? What do we have going on? Well, at 8:30 we had unemployment claims, which were 224,000 versus 213 expected. So worse than expected, but not by much. Preliminary non-farm productivity was looks like it was better than expected, and the preliminary unit labor costs were worse than expected. So yeah, what else we've got? 9:45 final manufacturing PMI, ISM manufacturing PMI, ISM manufacturing prices, and construction spending all at 10 a.m. We have the Ward's total vehicle sales, which will be released at some point during the day. And at 10:30, we have natural gas storage. And that's all we have for the U.S. today. But the ISM manufacturing PMI and manufacturing prices will be an impactful item at 10 o'clock. Taking a look at some charts. See, we had that ugly, nasty day yesterday. Now, just let me give you a heads up. Most of the time, when we have a Fed meeting, we do have a big day, one direction or the other. But then what happens is the next day, you usually get a reversal one way or the other. Because what happens is during the heat of the moment, the market reacts, and then overnight it has time to sort of digest the information. And it would not surprise me at all if we had an update today. That's very common for a Federal Reserve market reaction. The next day, it usually does the opposite. So that being said, where could we go? Well, we could certainly come back here and test these old highs and this trend line at 48.38. We could also, of course, go to the top side, and I would say, another big day. If we had a big day up, we might come back to that low volume node 49.34. So that's it's going to be, my guesstimate for the day would be that it's up, but maybe not significantly, because the news wasn't really good. The Fed actually said, no, we're not raising rates, and no, we don't think we're going to cut rates till maybe May, and that's going to depend on, and they gave a whole list of things it depended on. So the market was expecting some sort of positive reaction to lowering interest rates, and that just did not happen. Taking a look at the inventory was wicked, down 30,000 contracts. Ugly price action, correlated, so nothing to worry about. Again, we're gapping up a little bit this morning. We'll see where that goes. The intraday overnight action, if we scrunch this down, you'll see it's about 24 points. That's just a hair above average, so volatility is kind of back close to average. So nothing really to be too upset about one way or the other. Resistance on the top side, we've got some resistance at 49.10. 49.31, and I'm going to say 49.40. Support, on the other hand, got good support at 48.71, some more at 48.66, dropping down to 48.30, and maybe down at 48.10. Of course, the 4800 would also be a major level. Now, obviously, 4,900 is also a big round number we should be aware of. So those are your numbers for today. Stock Traders Almanac, very interesting today. 76.2. 76.2. That's a very high positive expectancy for today. In fact, the first day of February has been up 18 of the last 21 times. So over the last 21 years, 18 times on the first day of February, the market was up. So big number there for a positive expectancy from the Stock Traders Almanac. Hope you guys have a great day. Remember to subscribe, comment, and like. See you guys tomorrow. Hey, thanks for watching the morning brief. Check out my website for more information, oneontrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.